It's really an honor to have the opportunity to present the figures for the last year for the Purdue Federal Credit Union. The numbers are extremely strong, and there's a very good reason to be very happy with what's going on. This first sheet gives you an idea of our balance sheet growth going back to 2003. We have a couple of, we have an additional line here. The blue one at the top represents what our assets would be if we had retained all the mortgages that we issued. And as you probably know, we are the leader in residential mortgages in Tippecanoe County. And for each of the last 2 years, we've averaged about $215 million in loan originations. We obviously can't keep all of those on our books. We continue to service them while selling them to Fannie Mae. If we had not sold them to Fannie Mae, we would be almost a $1.2 billion organization. When the recession began in 2008, the total book loan activity started to decline, and that decline was not erased until 2012. During that time, due to lack of demand for loans or due to the inability to portfolio the mortgage loans that we originated, we've been building our liquidity. And our liquidity takes the form of various agency and government securities that we hold in lieu of other loans. So given the fact that we're a very sound and very successful credit union, our members have been very happy with our safety, and we've actually seen our deposits growing at a 10% per annum rate for the last 5 years. During 2012, they were up by 5.9% or $28.2 million. As you can see from the graph, the 5-year deposit, which would be the Purdue Gold, is 10% a year, and the loans, which were that color there, did not quite keep up because of the fact that there was just not a lot of loan demand other than for residential mortgages. One of the things that we pay really a large amount of attention to is we really want to be our members' trusted financial partner for life. And one of the measures that we use is relationships, where we take the average loan per member and the average deposit per member, which is exactly that. How many loans do we have on our books divided by the number of members? And as you can see, since 2008, we've had a steady increase from 8.3 thousand to almost 11,000 deposits per member, and loans grew from a little over 9,000, almost 9,700 to almost 14,000. The average deposit balance per member has grown over 30% during that period. And at the same time, loan growth per member increased by approximately 43%. This slide shows you what our loans outstanding are. And when it comes to the mortgages, we have two different categories. We have mortgages in our portfolio and mortgages that are serviced. And this shows the changes in those various categories in 2011 and 2012. And as you can see, with the exception of consumer secured loans, which typically would be auto loans, we've seen extremely good growth in our loans, anywhere from mid-single digits to low double digits. Overall loan growth was 6%. Commercial, consumer unsecured, and mortgage segments remain strong. The credit card program has been a very, very strong program for us with the Purdue Alumni Association Visa Affinity Card. That has seen significant growth over the last several years, and during the year of 2012, it was actually up by 9.9, almost 10%. The flip side of the loan growth is deposit growth, and as you can see, we've had good growth in all categories of deposits with the exception of certificates of deposit. And the main reason for that is the Federal Reserve has been extremely free with its money, and that's caused us to have very low interest rates. Those low interest rates have limited our ability to offer attractive rates on certificates of deposit, so the vast majority of the money is flowing into checking, savings, and money market. In total deposits in 2012 grew 7.6%. A key factor of Purdue Federal's financial soundness is the credit quality of the loan portfolio, and that is what this slide deals with. As you know, poor credit quality increases losses and directly comes out of the members' equity. Delinquent loans as a percent of total loans outstanding is generally considered to be a leading indicator of possible future losses. Purdue Federal's delinquency improved in 2012, and the delinquency rate of 0.65, the top line on the left-hand graph, remains well below our peer group, which is 1.03, which is also demonstrated on the bar graph on the side. 2012 charge-offs were 26 basis points, or approximately 0.25%, which was a slight improvement from 2011 when it was 0.3%. You have to go back prior to the Great Recession in order to see charge-offs as low as 0.26%. And as you can see, compared to our peers, with us at 0.26% and our peers at 0.68%, we're doing extremely well with the credit quality of the portfolio. It's a testament to the high standards of underwriting that the team at Purdue Federal relies on to continue a strong portfolio. And then we get into a very important aspect, and that is expenses and average assets. Growing memberships is a key importance to us. It's a central theme of management, and this is a very important graph from that standpoint. A strong return on assets, which is which are the bars, is key to building capital for credit unions. It's the only source that we have to build our capital because we're not a shareholder organization. And as the economy hit hard times, it was very important to us, starting in 2009, to really notch back on expenses as best as we could. And as you can see, our expenses to the average assets dropped significantly from 2009 to 2012, and that ended up right in the bottom line income, which ended up right in our net worth. In addition to controlling our expenses and increasing our assets, we also had income improvements from non-interest revenues. The majority of the other revenues is made up of Visa interchange fees and mortgage loan origination and servicing fees that we receive from those who use our charge card or do mortgages with us. And one of the things that is good about that is the fees go directly to the people who utilize the service. If they had a credit card with somebody else, they would be paying the same fees whether it was here or someone else. When it comes to fees directly charged to members, the typical things like non-sufficient funds, wire transfer fees, and all the other various fees that you get hit with, we are very, very low, just about a little over half of what our peers are, at $49 per year per member versus $89 per year per member for our peers. It's been something that we've worked very hard at. We do not want to get a lot of income off of things like non-sufficient funds checks. The next chart is our interest margin and other income, and as you can see, the interest margin, which peaked out at 3.57% back in 2009, has been continually drifting since then, down to 2.91% in 2012. And obviously the interest margin is just the difference between what we earn on our loans and what we pay on our deposits. 2013 is going to be another tough year when it comes to net interest margin. Interest margin has continued to decline due to the low interest rate environment. Historically low loan rates, especially in the mortgages, have occurred over the past several years. Members who have taken out these loans will be benefiting for a long time from those low rates, but at the same time, the return to the depositors has suffered along with that. The rate committee of Purdue Federal, which is made up of management staff, board members, treasurer, myself, and volunteers, every week we look at rates where we stand relative to our peers in the local economy, and we do everything we can to see to it that we're in the top third when it comes to deposit rates. Here is a very, very nice chart. This is a chart that we've been working very hard to get where it is right now. Member equity and net worth exists to support the future growth, develop new services, and to provide reserves for unexpected events such as what we went through in 2008-2009. Net worth ratio is one of the measures of financial strength. It's been the goal of the board of Purdue Federal for the past 10 years to improve the net worth ratio into a range of 8 3/4 and 9.25%. As you can see, as of the end of 2012, we were very firmly positioned with 9.29% net worth total assets. Very, very strong balance sheet. Came through a very difficult time in our nation's economic history and came out the other end in better shape than we actually went in. So, very, very good numbers. Purdue Federal member employees have done an excellent job of managing your investment for you.